Colleagues, we apologize. I think we should be starting any moment from now. Just give us 1 or 2 more minutes.
So good morning. Good morning, ladies and gentlemen. You're welcome to this edition of Taxpayer Engagement Webinar Series. And this series is, in the light of the series, just to educate our taxpayers on what is going on in the tax environment. And you're welcome to today's session. It promises to be an exciting time. And we have an array of panelists, and in a short while, we'll be introducing them. We'll also be having our executive chairman on this call in order to hear directly from him. And today, we're speaking on the recent changes in the Nigerian tax legislation and administration. We are all aware that in recent times, in 2019 and 2020, there's been the Finance Act for those 2 years, and the Act has brought about some changes in the tax legislation. And consequent upon those changes that it has brought, the tax administration has also been changed in some manner, and we are going to be explaining some of the changes this morning. We have panelists who will be speaking on every aspect of the change in the tax legislation. So, the consequent effect of it on tax administration. We are also aware of the new and revolutionary automation process of the service, which is the tax program.
Which is the tax program.
This morning, we will be explaining all issues that even have arisen from this. So I enjoy all participants to sit, relax, and enjoy the time. So I will now be given the floor while we wait. Okay, right now we'll be commencing. I think we have the executive chairman of the FRIS on the call right now, and we'll be inviting him to give our welcome address before we start. Mr. Chairman, you're welcome this morning, and we want you to come on board now and speak to us all, speak to the staff here as they have been waiting to hear from you. Thank you, sir.
Thank you. Good morning. Let me sit well. Good morning, the coordinating directors, the directors of the Federal Inland Revenue Service, much especially the Director of Taxpayer Services, the Tax Pro team, the distinguished taxpayers, ladies and gentlemen. I want to use this opportunity to welcome all the panelists, participants to this webinar series. FRIS, out of its cardinal goal and objective of being customer-centric, came up with this innovative strategy of engaging, educating, and sensitizing the taxpayers continuously, despite the challenges posed by COVID-19. This measure was taken in order to enable FRIS empower or give opportunity to our major stakeholder, the taxpayer, to fulfill their tax obligations in a comfortable and a credible manner. The maiden edition of this webinar series, themed or titled Clarifications on Contemporary Tax Matters in Nigeria, was held on 28 October 2020, and which we appreciate your participation and contribution, because it actually gave us opportunity to communicate, discuss with the taxpayers. Sequel to this, we graciously approved that the webinar series to continue to hold on a quarterly basis, so that it will provide us with opportunity of assisting the taxpayers to seamlessly and fully comply with their tax obligations, whether as taxpayers or taxes paid as a result of profit earned by them in the course of their operations, or the taxes that will help us to collect and remit as agent of collection. It is on this note that the second edition, themed Nigerian Tax Environment, Evaluation and Expectations of the Taxpayers in 2021, was also held on 25th March 2021. This series, this particular series, which is titled Recent Changes in Tax Obligation and Administration, highlights of Finance Act and the operations of the tax ProMax solution, was carefully chosen to enable us X-ray the recent changes in our tax laws, which were brought about by Finance Act 2019 and the second one of 2020, as well as the recent deployment of tax ProMax solution, aimed at simplifying the tax administration in Nigeria and to help the federal government, the state, and the local government to generate more revenue through indirect taxes. The session promised to be fruitful and engaging. An engaging one, as we have an array of panelists, very experienced, very brilliant, very willing panelists who are here to provide answers and clarifications to all issues agitating or that you have for us to solve for you. So once again, you are welcome, and I urge you to sit back and enjoy the session. Thank you very much.
Okay, thank you very much, sir, for your brilliant presentation. We thank you. We will go on right now to the host of today, and we'll be calling on the Director of Taxpayer Service to give us our opening remarks. Director of Taxpayer Service, Ajay, can you come up, please? Please mute you are mute, Ajay. Okay.
The Executive Chairman, Federal and Inland Revenue Service, the coordinating directors of the service, the group leads, directors, and co-panelists, colleagues, ladies and gentlemen. I welcome you all to the Taxpayer Engagement Webinar Series titled Recent Changes in the Tax Legislation and Administration, Highlight of the Finance Act 2019 and 2020, and the operation of the Tax Pro Max solution. This webinar is in line with the Executive Chairman, Federal Inland Revenue Service cardinal goal of making Inland Revenue Service is a customer-centric institution that is viable for ease of doing business by focusing on efficient service delivery to taxpayers, and also in making taxpayers to have a positive experience on tax compliant processes. Taxpayer Service Department service constitutes a set of administrative measures which taxpayers and general public can obtain information needed to understand the tax law, the tax system, that is the tax laws, the tax administration, and the tax policies, as well as the services taxpayers require to support them in fulfilling their voluntary obligation. Taxpayer Service Department is responsible for providing basic information, basic tax assistance to taxpayers, and also educating taxpayers. This webinar series is part of taxpayer engagement aimed at educating taxpayers on their roles and responsibility. The webinar will throw more light on changes in the legislation brought about by the Finance Act 2019 and 2020, particularly as it relates to company income tax, education tax, petroleum profit tax, value-added tax, stamp duties, and capital gain tax. It is important to note that the Federal Inland Revenue Service has made payment of taxes easy and seamless through the introduction of our online platform using the Tax Pro Max, where the taxpayer can be able to pay their taxes, obtain their tax identification number, file in their tax returns and other related matters online without even going to the tax office to do that. They can do it at the comfort of their offices. Furthermore, in view of the fall in oil prices, the Inland Revenue Service is now focusing on how to increase and improve the revenue base by focusing on indirect taxes like the value-added tax. So this webinar brought about people in the service, the panelists that have experience in addressing all the issues that will be raised by the taxpayers. So I urge all of you to listen and listen attentively and also contribute so that we will make the service great. Thank you very much for coming, and I hope you will enjoy this webinar series. Thank you very much as we proceed. Hello.
Okay, thank you very much, Ajia, for your opening remarks. And we will just go straight to the program of today. We will be taking, we have two major issues we want to address. Number one, an highlight of the Finance Act 2019 and 2020. And from there, we'll be moving to the operation of the Tax Pro. So for the Finance Act 2019, you'll be, so for the Finance Act 20, so for the Finance Act 2019, sorry, there's an echo. Okay, sorry for that. There was an echo. So right now we'll be going to the Finance Act and the operations of the tax process. So we'll be calling the panelists one by one. I will start with Mr. Matthew Bonjubola. He will be making his presentation. He will be majorly speaking on the changes in the Companies Income Tax Act, and he will also be speaking on changes as it concerns FRIS Establishment Act. So I'll call in Mr. Matthew. Thank you. You can come in for your presentation. Thank you, sir.
Thank you very much, Femi, the executive chairman, and all.
So, sir, sorry, you have 10 minutes, sir. Thank you very much.
All my colleagues, I think my task is the easiest of all, because by now we are all very familiar, I believe, with the changes introduced by the Finance Act 2020. I have been asked to limit myself to the CITA, that's Companies Income Tax Act, and the Federal Inland Revenue Service Establishment Act. I think scanning through the amendments, I think the significant ones for our purposes will be the changes, very slight changes made to the agricultural business. And that goes to the redefinition of what is agricultural business. What we used to have was agricultural business as a business. But by the Finance Act in 2020, it's been amended to primary agricultural production, which now is specifically saying that the scope is limited to produce directly from the farms, whether from the arable farming or fishery or poultry or animal husbandry that do not involve any form of processing. So for the purposes of banks that lend for agricultural purposes, the waiver of tax on interest earned is limited to loans granted for primary agricultural purposes. I think this is a major change, which we hope that our practitioners will take note of. Equally, there is a change to Section 14 of CITA, particularly with the addition of a subsection 5. Section 14 deals with the taxation of companies engaged in shipping, in airline services, and Section 15 that deals with transmission of data by companies. And so by the addition of the subsection 5, made it very clear that only income that have been earned by way of charges for the transportation of persons, that is passengers, animals, postal goods, will come under the operation of Section 14. all other income, specifically dealing with issues of demurrage, hire of containers, transportation, and similar services will continue to be taxed under the general law in Section 9 of CETA. Another major change that came in CETA is Section 25, with the addition of two subsections 8 and 9. And this deals with donations to government emergency funds, particularly now that we are still battling COVID-19. So donations made to a fund established by any government in Nigeria for the purposes of combating pandemics will now become allowable. There is also a very slight change to Section 33, which is a sort of a temporary change for the purposes of computing minimum tax. The rate before now had been 0.5% of turnover, but for 2 years, the rate was reviewed downwards so that as a sort of a palliative or as a relief to taxpayers in view of the challenges posed by the rampaging COVID-19. There was a slight review to Section 55 of CETA, which deals with filing of income tax by companies. Particularly, there is the addition of subsection 1A, wherein companies other than Nigerian companies are required to make full returns, and there you see the details of the returns required by this group of companies. And also, there was a little bit tweak of subsection 7, which is also a new addition that enables the FRIS to specify the form of returns, particularly for small and medium companies, so that where the service deems fit, such group of companies may not have to provide audited financial statements. Section 63 was amended, particularly in subsection 1, which now mandates every company in Nigeria to maintain books of accounts. We never had this provision before, but now it has become mandatory for every company to maintain books of accounts. I think these are the major changes that we have. I think maybe one more is the fact that now software has been included in the second schedule to the Act, such that it forms part of the qualifying capital expenditures for the purposes of capital allowances. For Federal Inland Revenue Service, not many changes, but very landmark changes were made. For example, Section 8 of the FRS Act now has been amended to enable FRS to provide assistance to other countries to collect tax liability. So if somebody has tax liability, for example, in, let's say, UK, and runs back to Nigeria, by Section 8 amendment, Nigeria now has the opportunity to assist that country to collect the debt and then forward to the relevant countries. Section 23 was amended to provide funding for reforms based on tax type. But big ones are in Section 25 and Section 26, which now enables the FRS to deploy technology for the purposes of tax administration and with appropriate penalties for companies or for I'm sorry, is my time up, Femi? I can see you have taken over the floor.
Answer. Please go on, sir. Go on.
So section 25, section 26 were amended to
Femi, I think it is better you take over, hence we cannot hear him again.
No. Hello, it's like Mr. Gwanjibola.
We lost him, so we
lost him to network. I guess we may have to now move on to the next. Yes, that's what I'm going to move on. Okay, it's back. Hello, Mr. Gwanjibola.
Yeah. Yes, I'm sorry. There was a power failure on this side, which took away the connection. I'm very rounding up now if you have not started something else. I was just trying to explain that it is now mandatory for any person in possession of data that are relevant for tax purposes to grant access to the service to make connection. Section 28A was also inserted to mandate relevant entities in banking, industry, financial institutions to provide information for automatic exchange of information purposes. Very importantly, Section 39 was also amended to make it very clear that taxpayer information is confidential and providing for penalties for any tax official, whether serving or retired, or that discloses taxpayer information to authorized person, to a fine of 1 million and possible jail time of 3 years. I think these are the major changes that were made to CETA and to FRS Establishment Act. I'm sorry for the hiccup caused by the loss of power. I hope I didn't hold you up too much. Thank you and God bless you. Femi, are you still there? I can't see you on the call.
Okay. Okay, sir. Oh, thank you, sir. Thank you very much for that presentation. We will be given time for people to ask. We will be doing a question and answer session later. But for now, we'll move on to We'll move on to VAT. I will be calling Mr. Orebajo to make his presentation. Mr. Orebajo, if you are there, please, you can unmute yourself. Please.
Good morning, everybody.
You can start while your presentation is being shared.
I'm waiting for the echo to go. I hope the echo is we have about two major changes in the ID track, that is Industrial Development Act, and about 18 changes in value tax that the FRIS 2019 and 2020 gave us. Femi, are you sharing my screen? If not, let me just go ahead. The two major changes of the Industrial Development Income Tax Relief Acts are: one is the pioneer status incentive given for primary agricultural production. The group lead has just given us the changes made by CETA on primary agricultural production, which does not need to be explained again. Now, for the pioneer status, they now have 4 years initial tax-free period, and this may be extended by 2 additional years subject to satisfactory performance. The second change is the definition of what a medium-sized company means in terms of primary agricultural production. It also tallies with what is in CETA, and that is that a medium-sized company is a company with turnover greater than 25 billion, but less than 100 billion naira. And now move on to Value-Added Tax Act changes for both CETA and for both Finance Act 2019 and 2020. The first one is Section 2 of the VAT Act, where we have changes in the place of supply rule. Not necessarily changes, but actually a more definitive statement of explanation of place of supply. And that for the purposes of the Act, any goods of supply consumed or otherwise utilized in Nigeria are those that are supplied in Nigeria. And it introduces the rule for that is in line with global best practice, so that any goods or service consumed in Nigeria, paid for in Nigeria, or supplied to Nigeria, or any compris that follows all those, that is the place of supply. Then we also have Section 2A, which talks to the time of supply of such products. Then the third one is the Section 4 of the Finance Act, which was given by Finance Act 2019, that moved the rate of tax from 5% to 7.5% with effective date from 1st February 2020. Then Section 8 of the Act talks about the time of registration for VAT. And this is very simple. A taxable person is liable to register upon commencement of business. Failure of registry when business starts means there will be a penalty to pay. I think the penalty will be talked about as we go on. And if that taxable business ceases to operate, then it can deregister within 90 days of such cessation. The next one is the obligation of a non-resident making supplies to Nigeria. Who is a non-resident? A non-resident is any person outside this country providing services or selling goods or products to Nigeria. And any such non-resident that makes a taxable supply of goods or services to Nigeria shall register for tax with FIRS, either directly by itself or through a representative, and obtain a tax identification number. It is either the representative obtains it on his behalf or the non-resident obtains such tax identification number. If it is a representative, the representative will withhold and remit the tax to the service in the currency of transaction. This is very, very important. If the transaction is in any currency, especially dollars, pounds, it was remitted in pounds. If it is in any other currency apart from that, it should be converted to dollars and remitted to the country. Then section 14 speaks about self-accounting. What do we mean by self-accounting? That is, any person to whom taxable supplies is made to in Nigeria and is issued an invoice on which no tax is charged, such person shall self-account for the tax payable. So the excuse that you received an invoice without a tax charge is no longer tenable. You just self-charge the amount of tax and remit the output tax to the service. Also, in the currency of transaction within the timeline prescribed under section 15 of this act. The importance of this section is this. For companies below the threshold, that is companies with 25 million naira and below, such a person who receives certain taxable supplies from such people because they are allowed by law not to charge and remit VAT. If you receive a service or a product from them, you are to self-charge and remit to FRS. Then we have section 15, which talks about the rendering of returns where turnover is 25 billion and above. Any taxable person with turnover of 25 billion and above shall render to the service on or before the 21st day of every month that threshold is achieved and remit same in the successive month. Then the remittance of excess output tax to the service and to utilize excess of input tax as a credit, which is section 16. It is talking about remission of tax. A taxable person must remit to the service where there's an excess output tax as against input tax. What happens here is that once you have your input tax, you deduct from the output tax that you have collected and you remit the balance to the service. And if your input tax is greater than your output tax, you are allowed to have that excess as a credit for subsequent months. And if over time the refund claim is more than what can be, the excess is more than what can be taken off as a credit, you can apply for a refund. Then section 19 talks about penalty for non-remittance. All the sections above that I have prescribed, there's a penalty of 10% as opposed to the previous 5% for non-remittance. And also, interest for penalties and amounts not remitted within the required period will be charged at the prevailing central bank rediscount rates, and this shall be added to the tax. For any failure to make this payment within 30 days after notification, the service is empowered to enforce payment in line with section 15 of the VAT Act. Then we go on to the next one, sections 21 to 24 have been delimited from the Act, so we don't need to talk about those ones. And we go on to section 19, which is the effect of non-remittance. I've also talked about it. That's penalty for non-remittance. Section 28 talks of failure to notify change of address. This is very, very important. If a taxable person has been using an address before, and the address for one reason or the other changes, every taxable person has a right to change address. But you have an obligation to report to the service within 30 days of such a change. And failure to do this in the first month attracts a fine of 50,000 naira only. And for every subsequent month in which that failure continues, the taxable person will pay a fine of 25,000 naira. We also have failure to submit returns. The fine is also the same. If a taxable person fails to file returns for the month in which the failure first occurs, the fine is 50,000 naira, and every subsequent month is 25,000 naira. That is section 35 of the Act. And in section 42, this is very, very important. When a business is sold or transferred from one entity to the other, there is a concession on this. As long as the business for 365 days is in the hand of the acquirer, there shall be no tax, there shall be no VAT on it. And this is a tax concession. But if it is less than 365 days of control and it is subsequently transferred, then VAT shall be applied and collected. Now, we are running towards the end. Section 46 talks about the interpretation of certain words, that is definitions of what is animal feed, definition of basic food items, definition of commencement of business, definition of commercial aircraft, exported service, goods and services, recognized group of companies, and so on. Then amendments to the various schedules. The amendment of paragraph 10 after paragraph 9 of part 1 of the schedule defines what is locally manufactured goods. And then there's a substitute in paragraph 2, a new paragraph 2, that is services rendered by microfinance, banks, people's banks, and mortgage banks. And last but not the least, the amendment of the sanction of paragraph 4 relating to the tuition of nursery, primary, secondary, and tertiary education, which is exempted from taxation. I think with that, I have exhausted the changes brought about by FA 2019 and 2020. Thank you very much.
Thank you very much, sir, for those presentation. I'm sure that our taxpayers are more enlightened with those few words that have come from you. I'll move on now to the next panelist. We want to exhaust those issues that have to do with Finance Act before we move on to to Tax Pro Max. So right now, I'll call on Mr. Matthew Osaneku to also make his presentation on the changes from Stamp Duties Act, changes from Personal Income Tax Act, and changes from the Capital Gains Tax Act. Mr. Matthew, you have the floor. You can start while we share from here. Thank you. You have 10 minutes, sir. The time is 11:51 now, so by 12 o'clock, you should round up. Thank you, sir. Mr. Matthew, unmute your system while you speak to us, please. What did it do now? Okay, while we await Mr. Matthew Osaneku, I can't see him on the call again. Let's go on. Mr. Okpai, are you here, please? We know that there are some operational issues that probably have arisen since the Finance Act 2019 and 2020, and we have Mr. Iro Okpai here to actually try to express some of those operational issues, probably maybe the way taxpayers have tried to implement some of these provisions and the issues they've been having on the field, and how they have resolved it before now. So that's why we have Mr. Iro Okpai, the Director of Technical Services, to come speak on them.
Yeah,
and
thank you, Mr. Femi. Mr. Femi Olorinde, sorry, we have power.
Okay, Mr. Matthew, you're back. Hold on,
power
please.
On and off.
Mr. Matthew, please hold on. Please hold on. Please hold on. Okay, sorry, Mr. Okpai, since Mr. Matthew is back, let's quickly take his presentation before we now move to operational issues. So, Mr. Matthew, you can start. You can start your introduction while your slide is coming up.
Yeah,
Mr. Matthew.
Thank you very much, Mr. Femi Olorinde. Yeah, yes. I'll be quickly looking at the major changes in capital gain tax, personal income tax, and stamp duties. Now, for capital gain tax, there are 5 major changes, and I'll be taking them in sequence. Section 2, subsection 4 of Capital Gain Tax Act introduced a new filing regime who disposes chargeable assets. We no longer have to wait when they file their income tax. So the filing regime provides that when a taxpayer disposes chargeable assets, he can file a return by 30th. In that regard, we issued a circular to further clarify that when you dispose chargeable assets from 1st December to May 31st, that you file returns by 30th June. When you make that disposal between 1st June to 30th November, you file returns by 31st December. Now, section 24, paragraph 12, introduces determination of location of assets and ship and aircraft used in international traffic. Now, the implication of this amendment is that when a ship or aircraft is used in international traffic, it is deemed
I guess Mr. Matthew's network is bad wherever he is. I think we may have to move on. Okay, we may have to move on. Probably maybe when he comes back, he will just give us an highlight. Just few things. We can't be waiting for so long. So I guess we have to continue. I want to know, Mr. Okpai, please, are you still on the call? Mr. Okpai, are you on the call?
Yeah, I'm here.
Okay, thank you, sir. So, sir, you just be taking us through the operational issues that have arisen since the passage of the Finance Act 2019 and 2020, and how we have addressed these issues. So what taxpayers need to know going forward, and probably some that still have issues on some of the application of the provisions of the Finance Act. We want you to throw light on it. Sir, please help us in the next 10 minutes or less. Help us address the taxpayer. Thank you, sir.
Executive Chairman, sir, distinguished panelists and participants, you're all welcome. The Finance Act 2019 and the Finance Act 2020 that introduced a lot of changes to the operations of the service have been carefully x-rayed by previous speakers, by the group lead, STOG, and Director of VAT. And we are now asked to talk about the operational aspect of it all. Yeah, what are the major changes that the Finance Act 2019 and 2020 made to the tax operation was the issue of 0.5% minimum tax for 2019, which was further reduced to 0.25% in 2020. At the initial stages of the amendment, the taxpayers were having enormous difficulty in implementing and understanding the law. And then the GTOG did a guideline to our staff, first of all, so that by the time the staff understand it, they will be able to explain it properly to the taxpayer. And then engage the tax practitioners and the taxpayers and major stakeholders by way of sensitization and explanation to explain to them the real meaning of the amendment that affected the minimum tax, especially in 2020, where there was a period-specific amendment to say from January 2020 to December 2021. Of course, all of us know that it was a palliative measure the federal government gave to reduce the impact of COVID-19 and end-size operation. So going by that, we did a lot of sensitization, we did a lot of explanation, and then we provided guidelines. And we have constantly been, especially at the initial teaching stages of first quarter, we were constantly bombarded by questions. But as we speak, I think everybody, both the taxpayer and the tax officers, have now understood the working and the implementation of the minimum tax provision by way of the 0.25% and 0.5%. So we no longer get enough questions from that operation. Again, too, there's this issue of reduction of withholding tax for companies in the construction and building industry, whereby it was moved from 5% to 2.5%. We also had a lot of questions and issues arising from that. But through proper explanation, sensitization, and engagement, we were able to resolve it. We no longer get questions relating to that by now. However, the entire amendment made by Finance Act 2019 and Finance Act 2020, all the changes they introduced, which have been highlighted by previous speakers, the GTOG embarked on provision of operational guidelines to our officers, so that through the guideline we issued, whether it is on the minimum tax provision, whether it was on the issue of a free trade zone, whether it was on the issue of VAT, we made a lot of guidelines. We provide a lot of guidelines to them to enable them to do it. Like I said, the TOG group is always supporting the taxpayers by way of education, by way of sensitization. So the Finance Act amendment areas, the question and the difficulties we're receiving when the act was early signed by the president have dried down significantly. We no longer get questions. However, the issue of tax promise is another issue that we want to talk about, not the technical aspect of it, to say that the TOG group, GTOG group, embarked on massive sensitization, all our offices through the support of the executive chairman, who now directed all the directors to be on the field, so that we can pursue the main three issues that early affected the tax promise implementation, which is the issue of adoption, the issue of knowledge gap, and the issue of technology. And by that visit we made on the field to do explanation to both, especially starting from the taxpayers and the tax offices and tax consultants, the issue of knowledge gap was drastically reduced. And then the issue of adoption, our officers, all of them are listening, were explained and addressed and requested to please adopt the implementation of the tax code, because by way of adoption, you own it and adopt it as your own. And then by so doing, you will go out of your way to ensure that the process works. Thank God, 99.9% of our officers adopted it and assured the TOG that they will ensure that the thing works. Of course it works. That was why the fantastic result we achieved last month, which had never been compared to any other result in the history of the service, thanks to our executive chairman and his management team, was recorded. And in July, we are still carrying on the sensitization, the explanation, even in conjunction with the tax program project in the GTOG set up a WhatsApp group where the change agent and tax controllers are linked and hooked together so that issues and questions arising from the operation of the tax programmers will easily be resolved, because there are some people that know more than the others. The visit afforded us opportunity to know that some of our officers are actually very good in ICT, and they easily grab the operation and the working of the task program. So when we discovered such officers, well, the idea was to share knowledge by bringing them together so that those who know, if any issue is raised on the WhatsApp group, before anybody can say Jack from Robinson, what are they would say, oh yeah, this is how I did it in my place and it worked. So we are continuously pushing, doing sensitization, doing training, carrying everybody along, all the stakeholders in the service, and explaining to, even we hosted the tax practitioners within Abuja. Those that asked called from outside Abuja, the big four, they all made calls to us and requested why certain decisions were taken. So we continuously provide guidelines to our officers and explanation to taxpayers so that they will understand the workings of the changes that have been made by Finance Act 2020 and 2019. And we know it's a continuous process. We continue to do it, we continue to provide it, and we are not going to get there. Thank you very much. Unfortunately, I did not provide any write-up because it was this morning, Femi, that you gave me this topic to say this is what I was.
Thank you.
So, and that's why I did it, because I will still provide a write-up, because if I have got the idea like yesterday, it would have been further opportunity to put it down. So thank you very much while I listen.
Thank you very much, sir, Mr. Okwai, for that presentation. I'm sure that our taxpayers have actually understood some of the processes and operational challenges and operational issues, and now they were resolved. Right now, we'll be going into a bit technical aspect of the tax pro max, and we'll be inviting the technical team who can tell us the nitty-gritty of the operation of the tax pro max. We're calling on Madam Chiaka Okoye to actually, and the team who will be speaking to us on the technical issues of the tax pro max, what taxpayers to know, what they need to know. I am sure that we've had several seminars, several workshops, several webinars with different groups. I'm sure we had one with ICANN. I'm sure we had one with CITM. We had one with LCCI, and we had even with ANAN. So I'm sure so many people have been, but we want to give this again to members of the public so that if they are still having any technical challenge, what they need to do. If Madam is on the call or any of our representative, please, you have the floor, please. Thank you very much.
Hello, good afternoon, Mr. Chairman.
Good afternoon. Please introduce yourself. And
my name is Salaya Abdulaziz. Good afternoon, Mr. Chairman, the coordinating directors here present, group leads and directorate staff, and our esteemed taxpayers. My name is Salaya Abdulaziz. I'm a member of the Tax Pro Max project team, and I'll be talking about the functionalities of Tax Pro Max vis-a-vis how we can do the filing and payments of taxes on Tax Pro Max. My bosses have spoken about the changes in the Finance Act and some of the new things that are now applicable to the tax laws. And I want to assure you that all the changes that have been made to the Finance Act have also been implemented on the Tax Pro Max. So it's easier for us to implement it because the solution itself is in-house developed, and we at a call of the director of projects and with the approval of the executive chairman, will always implement whatever changes that come with the provisions of the law. So please permit me to share my screen so that I will show us briefly on how to do filing on the Tax Pro Max. Okay, currently this is the taxpayers details, Toolsync Consulting Limited. Now, this is when a taxpayer logs in, you typically see a dashboard such as this. I am seeing more icon because I am logged in as a member of staff of FRIS. But if I am logged in as a taxpayer, you will see only those things that relate to your company. So if I want to file my taxes, basically there are two basic tax types for now, which is the VAT and the CIT. We also have the withholding VAT, and we also have the withholding tax as well. But for CIT and VAT, the form is usually generated from the beginning of every month for VAT and kept inside taxes due. For CIT, depending on the taxpayer's accounting year end, is when the form will be generated. If your accounting year is 31st December, on the 1st of January, the form will be generated and kept under taxes due. So let's see how to do this. If I click on taxes due, then I am presented with the CIT and the VAT. You can see the status of the two: not filed, not paid for CIT, not filed, not paid, but for VAT as well. And this is the assessment period. So let's briefly look at the VAT. I want to file this VAT. All I need to do is click on process. Now, one thing I need us to understand is whatever you have on the tax flow here is not new. If you are so conversant with the manual form that you have, it is the same as we have it here. So let me bring this one down. So we have all these schedules that are attached to the VAT form. So starting from the first one, which is the goods and services exempt, we also have zero-rated goods and services, sales adjustments, and the VAT form itself. Whatever you populate on these schedules the summary of it goes to the VAT form itself. So I'll start with the goods and services exempt. So for taxpayers, for now, the system currently handles local currency transactions, local remittances. So this is the list of goods and services that are exempted by the provisions of the VAT Act and the Finance Act as amended. Now we have basic food items. We also know that the Finance Act have further expanded the list to state in specific terms the goods or the basic foods that are exempted, starting from bread, cassava, rice, and all that. Those were stated. But assuming I deal with goods and services that are exempt, which means there is no VAT payable on that kind of exemption items. Assuming I sell rice, or I'm selling rice. Say for example, I am Saab store, for example, that sells rice. So sells rice worth of 2 million. All I need to do is click on what? Add record. So once you click on add record, the amount is recognized. And say for example, I also sell baby products. These are the items that are exempted by law. Say diaper, for example, and I sold diaper also worth of 2 million. What I need to do is click on add record. Now adding the record, the system adds the sum together, then you can then proceed. Now it moves us directly into the zero-rated goods and services. So we also have the list non-oil exports as zero-rated, goods and services purchased by diplomats, goods and services purchased for use in humanitarian donor-funded project. Assuming I sell to an NGO and I sell laptop computers, ordinarily a laptop computer should have attract VAT, but because I am selling to an NGO that is going to use it in this environment for children in the IDP to enhance their education, then I am to charge it as zero and not charge any VAT on it at 7.5 as prescribed by law. Say for example, I sell 2 million worth of laptops as well. So once I click on add record, the system recognizes that amount. So if you have as much as possible, you will do. then you can then proceed. Now, this is where we have the sales adjustment. Now, sales adjustment in the sense that when you sell goods to your customers and there were some adjustment, there were some returns of these sales. Assuming you sell items worth of 10 million and there were a return of about 2 million out of it. You will not declare that your total sales is 8 million because your record will be saying a different thing. So you still let us know that it is 10 million, but let us know that there was a return of that 2 million. So having done that, you fill out a description, the customer thing, the customer name, the date of transaction, the tax invoice, the invoice amount, and the amount so adjusted. Having done that, you click on add record as a profit, then you click on proceed. Then this is where we get to the VAT form. This is the form 003 itself. The first on the line is the total sales for the month. You can see it's lessing goods and services exempt and zero rated because output VAT is not due on the two. Now the difference between these two is exemption. You did not incur inputs and you are not expected to also charge output. But for zero rated, you may have incurred input, but you are not expected to charge output. It is charged at zero, and that is why it is called zero rated. Say for example, my total sales for the month is 30 million.
Sorry, Mr. Liar. Sorry, Mr. Liar. Actually, I don't know how long this is going to take. I would like you to be a bit faster so that we can move on.
Okay, actually, this is the last stage for VAT. I will just talk around the CIT. So we can see that the amount sold, sold. I mean, the exemption and the zero rated are both less from the total sales, giving you 24 million. Now, the difference here is the system does all the calculation for you. So if you have a purchase from this amount, say 20 million, the system also does the calculation. And it deducts the output from input and gives you what to pay. Having done that, you click on your declaration that you are taking responsibility for the information that you are submitting. Once you are okay with it, it says if this is the amount you are paying, you are okay with it. Kindly do not submit if it is not correct. So once you are okay with it, you click, then you submit. When you click on submission, that is when it takes you to where to make your payments. And because I am submitting this return late, that is why you see the system is calculating interest and penalty on this. So you select any of the payment gateway that you so wish, then the payment reference number is generated, then you can take it to making your payments at the bank. Now, let me briefly then talk about, because of time, talk about the solution itself. Now, what are the capabilities that the system has? The system can take into account the filing of VAT, the filing of CIT, the filing of CGT, the filing for withholding VAT and withholding tax. And once the payment is made for withholding tax, the beneficiaries are credited to their ledger so that when they are filing their returns, their credit note is available for them to use at the point of payment. We've had query from people to say, I cannot see my credit note. Your credit note is under the credit report because all the accounts are stated. You have withholding credits, you have the VAT credits, you have the capital allowance account, then you have the loss relief account. If you so have any figure out of all this, you will have them. And it is only at the point of payment for CIT that your withholding is displayed. It is not at the point when you are doing the filing. Once you are done with the filing, your liability is still established. Until when you now proceed to payments, that is when you will see the withholding credit notes that is available for you to use. Now, one other thing the system does is having made your payment, the system also generates the receipt for your payments, both for your revenue receipt for the payer and the credit receipt for the beneficiaries. And it is sent to your individual email. For taxpayers, once you also log in into the platform as well, you can also download your receipts and withholding tax credit notes. So these are some of the things that the system does, and it also processes your tax clearance certificates once you have satisfied all the requirements of filing and payments. The TCC platform is also a subset of the Taxpayer Max solution. So thank you, Mr. Femi.
Thank you very much.
You're welcome.
Thank you for your presentation. I will now be moving on to the question and answer session. We have a few questions that taxpayers have sent in before now, and some which they are also still sending in from the chat box. Mr. Laya, you can remove your slide, please, so that we can move on. So right now, we'll be starting with the question and answer session. And I have Mr. Wisdom Oshadari, who will be taking that session here. So I'll call on him to now take on. We will start with the executive chairman, who will be answering the first question. Thank you, sir.
Thank you, Femi Olarinde, the executive chairman, Federal Revenue Service, the group leads and the coordinating directors are present, the directory staff, and our panelists, and all the participants. I want to welcome you all to this section. We collected more than 100 questions from our participants, but as time permits us, we are going to be doing justice of some of these questions. I want to sincerely appreciate the executive chairman for being part of this program. And the first question is going to go to him as the #1 tax officer of the agency. And the question from the participant to the executive chairman goes to us. What is FRS doing on monitoring the effective use of all tax revenues generated? Taxpayers need to see the positive impact of taxes paid. I want to crave the indulgence of the executive chairman to respond to this, sir. This is, sir.
Mr. Olufemi, you can't set me up. Thank you for that very important question. Very important but delicate question for a messenger like me to actually reply or comment on. The only thing I would say is that at FRS, our responsibilities still remain assessment, collection and accounting for taxes that we collect. If I'm going to comment in line with that, it is our responsibility that when a body corporate or an individual who is an agent of collection or who does business in Nigeria realizes income, we make sure that as a first step, he voluntarily self-accepts himself and file returns with FRS. If he doesn't do that, the responsibility is now shifted to us to making sure that we assess him or assess the body corporate for purpose of in terms of profit he has generated in the ordinary course of his business. And in the case of indirect taxes, it's our responsibility to also ensure that he remits those taxes as at when due. So the question you asked is actually a three-step question. I think the first step is what I have answered. The second step is the responsibility of the taxpayer and or the agent of collection. The issues we keep having every day is because the responsibility of the taxpayer is also not too encouraging, because one, for instance, you as a business, you are appointed by the very day that you are given certificate of registration by CSC, which is also carrying a tax identification number. From that moment, you become an agent of collection. So the issue now is that majority of the taxpayers have been very cooperative as they collect these taxes on behalf of government. They remit as and when due. The issue now is that the few collect these taxes from ordinary Nigerians like me and you. Possibly, for instance, somebody who runs a supermarket, and in the course of costing a good, he added value-added tax. And the ordinary guy, including the students in the tertiary institutions who walk into a supermarket, buy one or two things, and these young men and women who their parents are struggling in the villages to pay their school fees would pay this VAT through the owner of the supermarket, and they will also refuse to remit such taxes. So that is the second step. While our responsibility are assess, account, and assess, collect, and account for taxes, it is the responsibility of the taxpayers to make sure that they act as a responsible act of collection, agent of collection, and also pay taxes voluntarily through self-assessment regime. The other one, that I think the taxpayer feel is the only process that we should measure, is what does government do with his money, with the money that he pays as taxes. It is those money that government is building infrastructure. It was those money that government is paying salaries to workers at both local governments, state and federal level. It is those taxpayer money that government is currently fighting insecurity that is everywhere, every corner, every local government, every state in our country. It is with that President Muhammadu Buhari went yesterday, for instance, to do a grand breaking ceremony in respect of a red line from Kaduna to Kano. And it is with that same money that they were able to implement, construct and commission the railway linking Lagos to Port Harcourt. Government is actually doing a lot, and taxpayers are also doing a lot. We at FRIS will also play our part in the three process arrangement. Thank you very much.
Thank you very much, sir, the ECFRS, for doing justice to that question. We want to appreciate you, sir, for honoring us with your presence. That has been a lot of a good encouragement to us. We appreciate you, sir. We'll go to the group lead strategic tax operation group. That's Mr. Matthew Bonjubola. And there's a question for you, sir. So how do we address the use of tax rates, that is stamp duty as an example, that are not backed by law? The law does not provide for vending agreements, and the closest to vending agreement is on a flat rate basis. Now we have press release quoting 1% and 1.5%. This goes to Mr. Bonjubola. Thank you, sir.
I'm sorry, I missed that. I was just coming in.
All right, sir.
So do you mind repeating the question?
Yeah, the question is that how do we address the use of tax rates? That example, stamp duties as an example, that are not backed by law. The law does not provide for vending agreements, and the closest to vending agreement is on a flat rate basis. Now we have press release quoting 1% and 1.5%. So a taxpayer wanted to know, sir. Thank you, sir.
Well, thank you very much. First of all, what I want everyone to understand is that taxation is a matter of law. And the Federal Revenue Service, as very law-abiding organization does not do anything that is outside the law. Service has made a pronouncement. You can be sure the legal backing. That is number one. Number two is the fact that when it comes to taxation, there are different sources of laws. There are laws that are promulgated into acts. There are regulations. There are circulars that are issued by relevant authorities. It is a collection of these. There are judgments of the court. It's a collection of all of this that forms the rules that guide tax practice. And so the fact that maybe something is not written exclusively in the Stamp Duty Act does not mean that it's not contained in other body of documents that make up rules that guide the operation of the tax law. And so if there had been publications as to rates, I mean, the taxpayer should be rest assured that there are laws that are backing up. Thank you.
Thank you very much, sir. We still have another question for you, sir. It's quite a long one. How do we resolve the practical application of the 25 million VAT exclusion clause? A practical instance would be an accrued turnover up to October of a given year was less than 25 million. Then in November, turnover suddenly for that month brings me to 26 million. The tax officer deduces a non-reduction of zero VAT position from January to October when I was not envisaging income, and insists I have to pay the penalties for period where I did not render zero VAT position. He's asking there should be more clarity on dealing with this. So we want to know your view concerning this, sir. Thank you.
Yeah, thank you very much. It is actually not my view. It is what does the law say? My view doesn't count. What the law says counts. Now, the law was very clear. It painted two scenarios. Scenario number one is once you have crossed 25 million threshold, you must begin to charge and to remit VAT. Scenario number two is if you anticipate that within the year you cross 25 million, then you must begin, even when you have not reached 25 million, you must begin to charge VAT and to remit. And I can give examples to back both. One example number one is, you have done a business in January, in February, and your cumulative invoices are sum up to 25 million. Immediately you realize that you must begin to charge VAT going forward. Scenario number two is at the beginning of the year, you won a contract for, let's say, 30 million naira, which you know that you are going to execute within the year. You already know that you are going to make more than 25 million turnover. And so the law says from day one, since you know that you are going to hit 25 million, you must charge VAT and remit. That is the rule. That is the law. I hope my explanation clarifies the issue. Thank you.
Thank you very much, sir, for that wonderful explanation. We will now be going to the Director Tax Policy and Advisory Department. That's Mr. Temitai Orebajo. The first question is, why has the Provision of Finance Act on exemption of turnover of below 25 million naira of corporate entities from income tax not reflected in PIT? That's a taxpayer who wants to know that. The Director of Tax Policy, sir.
Thank you, Femi. Now, the VAT Act on 25 billion naira is aimed at corporate entities. It is about turnover. It is not about income. PIT taxes the income of individuals. Generally, individuals don't generate turnover, except if they operate a business venture. So what the VAT Act says is for businesses. So that is why it is not in PIT. Remember, VAT Act is a separate act in itself for all businesses, whether the business is for corporate or for individual. And in PIT, what we have in PIT is for generally individuals. So the VAT Act is for businesses less than 25 billion. They are not expected to collect and remit VAT. I hope that satisfies that question.
Thank you very much, sir. We still have the second question for you. And this question goes to us. How do real estate recover VAT input, considering VAT output is no longer charged to products sold?
Well,
I'm sure it's from an estate person.
Yes. VAT input to a real estate business is now, they are now a consumer. Since they are not collecting VAT and remitting, they are the final consumer. So there's no talk of having input tax that they can take off, net off from output VAT. But being the final consumer, it is now part of their cost of sales, which they add to all their ancillary costs, and they take to the P&L item to calculate their gross profits, to calculate their profits. So that is how it is.
Thank you very much, sir. Director of Tax Policy, you have done justice to all these questions. We appreciate your presence, sir. At this junction, we will go to the Director, Taxpayer Service Department, who happens to be the host of this event. And the first question for you, Ma, is how do we resolve the problem of knowledge gap of tax officers, as bracket FRS desk officers, to address issues of contention? It goes beyond C, the TC becomes some innocent. It goes beyond C, the TC becomes some innocent persons do not insist, and they burdened with liability that they do not deserve. So I think this question has to do with a kind of knowledge gap from as it concerns our field officers. So the question goes to you, Ma, especially the FRA desk officers in our field offices. The Director, Taxpayer Service.
Hello? Maybe can I take that? Hello?
Hello. Thank you, Mr. Wisdom.
Hello?
Can you hear me? Hello? Okay.
I think you can go ahead and answer the question if you had it. You may be having a challenge.
Thank you. Okay, thank you, Mr. Wisdom, for
okay. Okay, you're welcome, Ma.
Okay, the service is doing a lot to see that all officers are trained, both locally and internationally, to bridge the knowledge gap of officers in the tax office. What is like the Director technical also put one or two things to also contribute to that.
Okay.
Director Technical, please respond to this.
Yeah, thank you very much, Mr. Femi. As we speak currently, officers from this department are on the field, practically demonstrating to our officers in tax offices nationwide on the how to review debt examination and desk review, and how to gather intelligence to bridge the gap between them. So constantly, we are always guiding the tax offices. I mean, it's a new development that the EC, thanks to EC, who approved that we visit all tax offices to explain the process of desk review and desk examination to tax officers, and including sensitization on them on tax registration, taxpayer registration, and intelligence gathering. So, like I just said, some officers, as we speak, are in Enugu doing the same thing, some are in Ibadan doing the same thing. So the knowledge gap is being great. The executive chairman has made it a point of attention to ensure that not just theoretical knowledge, that practical knowledge, practical demonstration of what officers do is presented to them by taking them through from beginning to the end, just like the tax pro people is also doing. So the knowledge gap is being bridged, and officers are coming up strongly and strongly. We also, there's plan on board to introduce regional bi-weekly or monthly state coordination training, whereby you gather officers together from in any particular state coordination and then put them together, then bring experts, professional experts from in-house to go and demonstrate practically to them what we do and what is expected of them. So that is ongoing and it continues to be done. Thank you very much.
Thank you, sir. We still have more questions for you. The question goes to, in the course of the challenges encountered towards June 30th, 2021, and the executive chairman extended the deadline for filing to 31st July 2021, and also extended the period of DIN generated within which to pay before it lapses 30 days. The platform was not adjusted and DIN generated and wasn't paid within 24 hours has accrued unimaginable daily interest as penalty for not paying within 24 hours. How can this interest generated be adjusted since tax controllers have not been authorized to adjust?
Yeah, thank you very much, Femi. I think number one is that we need for us to understand the filing process. There are taxpayers who are filing, who due date, it was supposed to be March 2021. That means the return is overdue. If the return is overdue and it was not filed on time, and then you file, of course, the DIN will expire within 24 hours because the interest is supposed to be a daily accrual. And that is one that you find difficult, that you can say the interest is filed, but it is not a current 30th June filing. The guy is supposed to have filed since 31st of March, and he did not file. So when he now file now within that period, it's an overdue filing. The interest will be computed daily and given to him. However, for the ones that are due for 30th June, they are not. If you look at the executive chairman memo, it did say that interest and penalty will not be charged, and of course, that it has been done. The service is not, the tax program is not charging interest and penalty on the ones that are due for 30 that have been extended to 31st July. So that is the thing. So those ones that are having that problem are the ones that was supposed to file since March or December or earlier years. Thank you very much.
Thank you very much, sir. We still have another question for you. So, considering the possible challenge of the software malfunction or imperfection in the filing beyond July 31st, 2021.
I think there was a loss in communication between. Can you please repeat that one?
Considering the possible challenge of the software malfunction or imperfections, would there be need for FRS to extend the manual filing beyond July 31st, 2021?
It's okay, thank you. But meanwhile, I don't think we are doing any manual filing because the EC have directed that all filing should be through tax programs. And there is no software malfunctioning. The EC have deployed every officer involved in the implementation to ensure that the knowledge gap, which was the teaching problem we had initially, is breached. And a lot of training, like I said before, have taken place and is still taking place. So there's no equipment malfunction. The tax pro solution is working. The problem we had initially was that of adoption. And now that everybody has keyed in and adopted it, the teaching problems have reduced. So there'll be no need, there's no manual filing and there's no need to extend any manual filing going on. We want everybody to file the management want everybody to file through tax pro, and it is going on. And because when we identify those three major problems of knowledge gap, adoption, and small technological problem, the ICT people are there. They adjusted and they balance the network to expand the bandwidth so that it can accommodate everybody. Those are the traffic from busy areas to be taken to lesser areas. So no equipment malfunction as we speak. We are moving forward and we are going very well. Thank you very much.
Okay, sir. Before you go, we still have one question for you. So, being the first time implementation and compliance, how do we integrate previous capital allowances into our accounts other than the ones calculated by the tax promas?
The capital allowances is like the unutilized credit note. What is expected is that the way you have been asked to go and upload the unutilized credit note into the tax pro is the way you are expected to upload capital allowances, previous capital allowances, and losses. So both capital allowances, losses, and unutilized credit note are supposed to be uploaded in the same process to the tax promas solution. Nobody is supposed to lose it. I wouldn't have intention of you losing the capital allowances and losses. You can upload it just the way you upload the withholding tax, unutilized withholding tax credit.
Thank you very much, sir, the director, technical. We appreciate your being in our midst. At this junction, we'll go to the group lead digital and innovation support group, Madam Cheka Okoye, the tax promas group team. The first question is, tax promas is an AI, I guess maybe it's artificial intelligence. It doesn't recognize companies that don't have the turnover of 25 million in previous years. How do we rectify for companies that tax promas has brought May VAT filing for without paying the penalty? This question goes to tax promas team. Hello?
No, please, can you take the question?
The question is, okay, tax promas is an AI. That is maybe artificial intelligence, I guess. This is how the question came from the participant. It doesn't recognize companies that don't have the turnover of 25 million in previous years. How do we rectify for companies that tax promas has brought May VAT filing for without paying the penalty?
Okay, I think one thing I need to first clarify is the fact that the system recognizes the turnover threshold. Okay. And we also know that the VAT threshold for 25 million is cumulative in nature. Yeah. It is not until you actually cross the 25 million. This is the cumulative for what you have until you get to 25 million before you begin to charge VAT. So for those who, for CIT as well, if you file your returns and your turnover is less than 25 million, you are not paying anything. The system is not going to calculate any CIT for you because the law provides that it is zero at that point.
Thank
and
you very
everything
much.
Finance Act has already been implemented on the system.
Yeah, thank you very much. The second question, how do we bring in balance brought forward of our assets into the tax promas solution?
Okay, balance brought forward of assets into the tax promas solution. I think I need to clarify this. Now, at the point of registering your assets under a non-current asset schedule in the tax promax, it is expected that every taxpayer have the historical data of their assets, knowing when such asset is bought and put to use. Because the date of purchase of the asset or the date the asset is put to use determines the lifespan of that asset and the remaining useful life of the assets. Now, it also determines the capital allowance claimable for that class of assets. So in most accounts for taxpayers, especially for tax consultants, what they usually have is the net book value of the asset and the addition for the year. But that asset was, the net book value you're talking about, the asset was actually bought someday. So you need to put the dates of when the asset was purchased, then the system will be able to calculate the lifespan of that asset and vis-a-vis determine whether the asset is entitled to both initial and annual allowance or only annual allowance. And even if you are depreciating an asset and the asset has completely gone beyond the number of years it will enjoy capital allowance. The system will not calculate any capital allowance for such class of assets. Thank you.
Thank you very much. We still have another question. Say, how can we file previous year's account on tax promas, e.g. 2019 and 2018 accounts?
Okay, how do we file previous year's accounts 2019 or 2018? Fine, because computer looks forward in most times, but that does not mean you cannot do that on the system. If you have not complied with the 2018 and 2019 year of assessment, you can simply approach the tax office where you file a return, and the assessment period for those periods, the assessment returns for those periods will be injected for the taxpayer, and the taxpayer can file it, and the system will do the calculation, including the LRP, interest and penalty.
Thank you. Please, we still have more questions for you. How will the acquisition and accumulated depreciation before 2020 be treated?
Okay, when it comes to the issue of accumulated depreciation, for tax purposes, only the depreciation for the current year is what is more important when you are doing your tax computation. So the system also does the calculation of the depreciation based on the rates that the taxpayer imputes as the rate of depreciation, and the cumulative depreciation is also taken care of. Now, we've also made provisions for taxpayers to be able to even inject the actual depreciation that they charge, because the system does a straight line calculation of depreciation. If the taxpayer's own is on reducing balance, you can actually impute the actual amount to charge as depreciation if it doesn't tally with what the system has calculated. Now, as for the accumulated depreciation, only the depreciation charge for the year is what is added back at the point of doing profit adjustments and doing your tax computation.
Thank you very much, Mr. Alaya. You have done justice to some of these questions. This junction, we would like to bring in Mr. Matthew Osaneku from Tax Policy Department. He was actually supposed to speak on Stamp Duties Act, capital gains tax, and PIT, but because of network hitches, he couldn't come on board. So, Mr. Matthew, you can just give us a highlight on this, where we still also ask some questions from you. Thank you.
Yeah, thank you very much.
Please, we just have 3 minutes to do that, please. Summary. Thank you very much.
Yeah, thank you very much, Mr. Wisdom and Mr. Femi. For CGT, I'll be going straight to the major amendment that was made in 2019 and 2020. Section 2, Section 4 of CGT was amended by introducing new filing regime. The taxpayer that disposes chargeable assets now need to file returns on 30th June and 31st December. When you go to our website, you see a circular that clarifies when you dispose chargeable assets between 1st January, 1st December to 31st May, you file your returns by June. When you dispose chargeable assets from 1st June to 30th November, you file by December. Another amendment that was also introduced in 2020 is determination of location of assets for ship and aircraft used in international traffic. In subsection paragraph F of section 24, the word international traffic was added. The implication of this addition is to input that where a ship or aircraft used in international traffic is situated in Nigeria, irrespective whether the ship is located in Nigeria at the time of disposal. Where the owner of the ship and aircraft is a resident of Nigeria, it is deemed to be deemed to be located in Nigeria. And where the ship or aircraft is used for any other purpose other than international traffic, the disposal of that chargeable asset is subject to capital gain tax. So another introduction to CGT was section 32 in 2019 by introducing a new rule for chargeability of capital gain tax on transfer of assets when asset is sold during business reorganization. So where control exists or where it is saying that they are members of the same group and they have been a member of the same group for 365 days prior to the day, prior to the time of reorganization, capital gain tax shall not be chargeable. But this concession will be rescinded if there is a subsequent disposal after 365 days. Another amendment was to clarify that was done in 2019 and 2020. It's Section 36 of Capital Gain Tax Act. In 2019, the compensation for loss of office was increased from 10,000 to 10 million. Now in 2020, it was further clarified that only the excess above 10 million is chargeable to CGT. For example, if you dispose, if an employer pays compensation for loss of office to an employee of 15 million. So what it means is that the excess, that the 5 million will be chargeable to CGT. So let me quickly rush to personal income tax because of time. Section 6A of personal income tax introduced a new rule. What we call significant economic presence rule was introduced. That rule implies that when a non-resident furnishes technical management, consulting, and professional services to a resident to a person in Nigeria, that person in Nigeria has the obligation to deduct withholding tax, and that withholding tax becomes the final tax in the hands of the recipient. Also, Section 20 of personal income tax was also amended. That section stipulates that any pension, provident, or retirement fund that is not approved by Pension Reform Act will not be allowed as a liable deduction. Section 24 of personal income tax was also amended, giving us the new rule for commencement of business. That was done for CETA in CETA Section 29. For PITA was Section 24. Section 24. That rule says for the first year of assessment, the commencement rule says for the first year, the date of commencement to the end of the first accounting period. For the second year of assessment, the first day after the date of after the end of the first accounting period to the end of the second accounting period, and that is done on PYB. Also, cessation rule in line with Section 25 was also amended, which gives a new rule for cessation, and the rule states that when an individual of vocation or trade ceases business, the rule says that to determine the year of cessation, that is the beginning of the accounting period to the day of cessation. So that's a knock off the old rule that talks about the issue of ultimate year and penultimate year. And also Section 33 was also amended and giving a new definition of gross income, which says gross income means income from all sources, income from all sources, and say less non-taxable income and income that are exempt in line with the sixth schedule of PITA. And also Section 37 was also amended. This section provides that when an individual or an employee earns minimum wage of 30,000 per month or 360,000 per year, that person will not be subject to the provisions of PITA or provisions of minimum tax. And also Section 49 of PITA also introduced compelling banks, that banks must require any person that wants to open a bank account to obtain tax addition number, to obtain TIN. This is to expand the tax base and bring prospective taxpayer to taxnet. Also, Section 58 of PITA was also amended. This section provides trying to ensure that we are also in line with the computer age. You know, when you file objection must be in writing, and when you make objection in writing, it may be delivered in person, but the new rule says you can also deliver by courier service or via electronic mail. You can send mail, and your objection will be valid as long that other provisions in line with that Section 58 are met. 1, it must be in writing. 2, you must state its ground of objection. 3, you must also complete the tax liability and file to FRS. So let me rush down to stamp duties. Permit me, Mr. Wisdom or Mr. Femi, Stamp Duties Act was also amended. Section 2 of Stamp Duties Act expand the meaning of stamp. Expand the meaning of stamp to include electronic stamping and also electronic acknowledgement of stamp. This is to increase the scope, the scope of instrument liable to Stamp Duties Act. Now, it may interest you that Section 4 of Stamp Duties Act was also amended. That section provides the competent authority that they have the power to impose, to charge, and collect stamp duties. And that provision, when you look at that provision, it substitutes federal government with FRS, Federal Inland Revenue, while the state government was substituted with the Federal State Internal Revenue Service. Now, that provision, Mr. Wisdom, that provision provides very clearly that Federal Inland Revenue Service is the only competent authority to impose, to charge, and to collect stamp duties in respect of instruments between a company and individuals, or a company or group of individuals. So where there is an instrument executed between any company and individuals, FRS is the only competent authority. Now, the state internal revenue services or the revenue tax authority in states can only impose, can only charge and collect stamp duties where an instrument that is executed between individuals and persons. Also, let me quickly go straight to a new introduction made by Section 89. Section 89A of Stamp Duties Act introduced what we call a new rule of electronic money transfer levy. It's a new levy, and what that does is that it provides a base where electronic money transfer between transfer of money from one bank to another. So as long as it is above 10,000 naira, 50,000 naira will be charged as one-off charge, and also empowers the Minister of Finance to make regulation. As I speak, the regulation has reached an advanced stage and it will soon be in the public domain. Ladies and gentlemen, that's all I have for now because of time. Thank you. I hand over to you, back to you, Mr. Wisdom, to continue the proceedings. Thank you, Mr. Wisdom.
Thank you very much, Mr. Matthew, for doing justice to some of those issues, knotty issues, as regards the Stamp Duties Act, Capital Gains Tax Act, and of course, Peter. We so much appreciate you, sir. Quickly, we just have 2 questions for you. And the first one is from the participants. We need more clarity on Stamp Duty Act and Capital Gains Tax conflict area of administration between FRS and state IRS. Mr. Matthew, thank you, sir.
Yeah, thank you very much, Mr. Wisdom, for that question. Like I said in my presentation about stamp duties, thank God for the Finance Act that have clarified that Federal Inland Revenue Service is the only competent authority that shall impose, that will charge and collect stamp duties on instruments where that involves companies, individuals, or group of companies. The underlying word there, Mr. Wisdom, is company. As long as that transaction, that instrument is between a company or an individual, or a company or group of individuals, Federal Inland Revenue Service is the only competent authority. Now, state internal revenue services or tax authorities in the state, we only collect and impose stamp duties on instruments between persons, between individuals only. Now, when you look at the provisions in Capital Gains Tax Act, Capital Gains Act Section 43, Section 43 of Capital Gains Act actually provides that the board, FRS, will collect capital gain tax where there's a disposal of chargeable asset between a company and individual, while the state will collect capital gain tax where the disposal is between individuals. So there's no controversy. Just as long as a company is involved, Federal Inland Revenue Service is the only competent authority to collect stamp duties between companies and also disposal of assets when it comes to capital gain tax. Thank you, Mr. Wisdom. Over to you.
Thank you very much, sir, Mr. Matthew. Quickly, we want you to respond to this second question. That the implication of the Finance Act amendment on small-scale businesses in Nigeria. The implications of the Finance Act amendment on small-scale businesses in Nigeria. Thank you, sir.
Mr. Wisdom, thank you very much for that question. You could see that the government is highly interested in the growth and sustainability of small businesses. So that's why when you look at the provisions of CETA, Section 23, provides that companies with turnover of less than 25 million are exempt from paying company income tax. Also, when you also look at the provision of Section 15 in VAT Act, that provides that where you have your singular or cumulative turnover within a year is less than 25 million, you are not expected to charge and impose VAT. All these provisions are to encourage small businesses. And also, you can see that the provision of tertiary education tax was also amended. That is, when you have a turnover below 25 million, as we are exempted from company income tax, we are also exempt from paying tertiary education tax. Permit me also to let you know that the provisions of Section 1, subsection 7 of EDITRA means Income Tax Development Income Tax Relief Act, provides that a small and medium enterprises, a small scale and medium enterprises that delve into primary production, primary agri production business can now enjoy tax holiday. Mr. Wisdom, that's a beautiful way of encouraging small scale businesses and agri business. That if you are a small business, you are also a medium type enterprises, and you delve into agri business, you have a tax holiday. In the first instance, 4 years in the first instance, you can also be extended for additional 2 years, giving you a maximum of 6 years to enjoy that tax holiday for small business, turnover of below 25 million, and for medium, if you have a turnover of 25 million up to 100 million, you enjoy that tax holiday. So a lot of incentives are out there, Mr. Wisdom, for those businesses, those small businesses, as one of the policy trusts of the federal government of Nigeria. Thank you, Mr. Wisdom.
Thank you very much, Mr. Matthew, for doing justice to some of those questions. We want to appreciate you, sir. We want to thank the panelists and all the participants. We received a lot of questions. Some of them, because of lack of time, we will not be able to respond to them now. But however, we are going to respond to those questions and send to all the participants' email. So at this junction, I want to hand over to my colleague, Femi Olarinde. Femi, over to you. Thank you.
Sorry, thank you, Mr. Wisdom, for that round of questions. And thank you, panelists, for doing justice to those questions. We have several, like Mr. Wisdom have spoken about. We have several questions. And because of time, we will not be able to take audience questions. But however, I want to assure the audience that we've taken down all your questions and we will be answering them and responding to them as you have dropped your email during registration. But before we go, I would also like to highlight some things. The Tax Pro group has been, from one of the questions we received from one of the concerned, a taxpayer is asking that we need to have a demo. Probably if you are going to have a demo to show all you've tried to show us today, like a demo video, which you can post on our YouTube and all our social media handles, and the taxpayer can just click on and see the step-by-step approach. That they will appreciate that. Also, taxpayers have asked that if we could share the presentation that came out today. Yeah, we're going to be sharing those presentations, and so that they could be proper understanding. I also want to tell every taxpayer that FRIS had introduced, recently released 14 information circular, And about 9 of this information circular were to address issues on Finance Act and the application. So I urge every taxpayer to visit our website where you can download all these 14 circulars. Before we go, I would like to give the panelists the opportunity to give their parting shots. I don't know if the chairman is still on this call. We can start with you before we close. Just 1 minute, parting shot from our panelists. Mr. Chairman, are you on? Okay, I'd like to move to Mr. Matthew Bojubola. If you're there, 1 minute, your parting shot, please. What you think the taxpayer should know that probably we've not spoken about?
Well, I think we've said all that needs to be said. What is required is the fact that we must embrace voluntary compliance because, like I do always say, the cost of non-compliance is much, much higher than the cost of compliance. If there's going to hurt anything, is take advantage of the facilities provided by the tax pro max to make your filing and compliance easy. Thank you and God bless you.
Thank you, sir. I call on Director, Tax Policy and Advisory, Mr. Orebajo. Your parting shot, please.
Yes, I will want all taxpayers to continue to seek for ways for better understanding. Any issues on tax that may be cloudy in their minds, they should always address it through the proper channels at FRIS and ask for clarification and understanding. The first step is at the level of the tax controllers. The second step is at the level of the state coordinators. Then if they are not satisfied, they cannot escalate to headquarters. By asking questions on such issues, areas of contention will always be easily resolved for them. Thank you very much.
Okay, I go on to Director, Technical Services Department, Mr. Hiro Okpai. Your parting shot, please.
Thank you very much, Femi. Our esteemed taxpayers and participants, the FRS have decided to have a different way of doing things by way of the tax pro, because we all know that you cannot do same thing over and over again and expect different results. The tax pro mass implement solution have come to stay. If you have any challenge or any issue relating to that, you can always refer it to from the office to the implementation project team, to the steering team, and to the head office. We want you to continue to support the service, continue to support the nation, because the more tax revenue generated, the more critical infrastructure and other things that the federal government will do for everybody. And we are always available to answer your question if you refer it to us. Thank you very much and God bless you.
Thank you very much. I will go on to the Tax Pro Max team. If Madam is on call, or is it Mr. Alaya, can your parting shot, what you think is very important about Tax Pro Max that have not been said in 1 minute? Thank you.
Okay, thank you, Mr. Femi. Our parting shot is that we encourage every taxpayers to adopt the use of Tax Pro Max. Tax Pro Max is saving both the tax office and the taxpayer a whole lot of resources. It gives you even an extended period for your filing. You can do your filing weekend and even during public holidays. For us as a service, it also saves us the cost of printing the manual form for you to filing your returns. That's a huge cost on our part as well. So we want to encourage you to continue using it. The more you use it, the more we'll be able to improve on the system. Thank you.
Thank you very much. I'll call on Mr. Matthew Osaneku. Your parting shot, please. 1 minute.
Yeah, thank you very much, Mr. Femi Larinde. My advice to taxpayers my advice to taxpayers is for them to go through our website, www.frs.gov.ng. When you click tax resources, you will see a lot of circulars that have been issued, regulations, and some public notices that have been issued, so that you can take advantage of them, go through them, so that you can abridge yourself with all the changes in the tax law. We've made further clarification. And also, if you also have issues with some specific issues, you can get across to the FDEX, line, fdex@frs.gov.ng. Maybe I will allow the Director of Taxpayer Services to also roll out some of the numbers that you can reach. They are on and they are functioning. You can reach those lines. The Director of Taxpayer Service we do that. And also we can also reach us at Tax Policy and Advisory Department. And our email address is tpld@frs.gov.ng. If you have specific provisions that you need to clarify, you can reach out at Tax Policy and Advisory Department, number 12 Sokode Crescent, we will say Zone 12, Abuja. Thank you, and God bless you.
Okay, thank you very much for that. Before we close, I don't know if the executive chairman is back on the call. Okay, I'll ask the Director of Taxpayer Service, the host, who saw us into the event, to also escort, to also see us off the event as we were closing. So, Madam Ajiayero, your parting shot and closing remark. Thank you.
Thank you very much, Mr. Femi. I wish to add that the executive chairman has given the taxpayer service department to go ahead and set up a self-service station. How does the self-service station works is that he has given us the go-ahead to set up a self-service station in each and every office, whereby the taxpayers will have access to internet facility and a laptop or a desktop, whereby they can go into any tax office, have that access to use to file in their returns, pay in their taxes, generate TIN number, generate receipt, and also apply for their tax clearance certificate and also obtain their tax clearance certificate, especially for small and medium tax offices that they don't have access maybe at home or in their offices. There will be a dedicated line whereby they can use free of charge in the tax office. This is possible because to enable them have it free, to enable them do it yourself. If you can't do it yourself, there is a dedicated staff that has already been trained to assist the taxpayers to get it done perfectly well. With this note, I wish to thank the Executive Chairman, Federal Inland Revenue Service, for giving us the opportunity and go ahead to host this webinar series, and also the taxpayers and all other stakeholders and the panelists for their time and also their ability to explain to the taxpayers on their roles and responsibility, and also our esteemed taxpayers for their time. And we are also looking forward to having you on board on our next webinar series, which is expected to take place in September 2021. Thank you for your time. Thank you and thank you. Goodbye. Please don't forget to reach us at our numbers are 090-744441, 090-744442, or 090-721111, or 090-737-77777. Or also you can reach Inland Revenue Service at www.firs.gov.ng or helpdesk@federalinlandrevenueservice.gov.ng or taxpayer service at firs.gov.ng. Thank you for listening.
Thank you very much, Ma. And on this note, you will come your way again. We've recognized everything you've said. We're still checking the chat box, the Q&A session. We try and respond to most of them, and email, and also use it to better our work. That is in terms of our in public notices, our information circulars. And we thank you for coming today. Like everybody have, thank you until we see again. Goodbye.